We welcome you to the Property Improvement Program, or PIP, underwriting training today. This is brought to you by the Michigan State Housing Development Authority. Appeal of a PIP loan to the homeowner. The interest rates may be lower than traditional banks. The loan can be amortized over 20 years. Loan amounts may go up to $25,000 for single-family homes. There is a high CLTV maximum. Improvements may be completed on manufactured homes, on real estate, or in mobile home parks. Condominium improvements are also eligible. The credit score minimum is low. Value of a PIP loan to the lenders. Lenders can offer PIP loans to customers that do not qualify for the lender's home equity loan product. It keeps customers that may have a first mortgage with the lender within the same lending institution. Offering PIP can bring new customers into lending institutions so other bank products can be offered in addition to PIP. The lender may earn CRA credits. Please note, MSHDA is the investor on this loan. The lender's underwriter must perform a pre-qualification on the customer, gather loan documents, submit the documents to MSHDA for approval, then the lender holds the closing and disperses the funds. MSHDA will purchase the loan within 10 days. MSHDA will service a loan through a subcontractual servicer. PIP loans are insured by HUD's Title I program, and all lenders must be Title I approved HUD lenders. More details on this are offered at the website listed. All lenders must have MSHDA's online PIP portal access with a username and password. The PIP portal is where the application is entered, forms are accessed, and informational material is updated. Please note, participating lenders are posted on MSHDA's website at www.michigan.gov/home improvement. Lenders should review all training materials available. That includes this training webinar, the PIP operating manual, the program guidelines, and MSHDA's public website listed here. There is also a closing purchasing webinar available that reviews the closing documents and the contractor disbursements and inspection forms. Before you start, the property must meet MSHDA compliance as outlined in Section 5 of the PIP Operating Manual. The borrower's name must be on the warranty deed with at least 50% ownership. The property must have a CLTV of 105% or less. The total household income of all adults in the home does not exceed PIP's current household income limit of $105,700 as outlined on MSHDA's public website listed here. All borrowers on the app must have a minimum credit score of 620. All borrowers on the app must have a debt to income that does not exceed 45% for total debt and 35% for household debt, as outlined in Section 10.02 of the PIP Operating Manual. The improvement must be eligible, as outlined in Section 8 of the PIP Operating Manual. Improvements must be permanent, such as structural additions, alterations, and renovations or repair, such as weatherization, roofs, windows, furnace, or septic system replacements. Interest rates based on gross household income. Interest rates and income limits are posted on MSHDA's public website listed here. Currently, the rates are as follows. Gross household income of $19,999 or less is 4% with an APR of 4.5653%. Gross household income between $20,000 up to $39,999 is 6% with an APR of 6.6123%. Gross household income between $40,000 up to $105,700 is 8% with an APR of 8.6610%. Homeowners may qualify for PIP because there is no asset limit and no verification of assets is required. Homeowners insurance is not required. As outlined in Section 7.06 of the PIP Operating Manual, loans $7,500 and under do not require a lien placed. Loans $75,000 and one up to $25,000 do require a mortgage. If the PIP loan will be subject to a mortgage and become a second lien, the property must hold no more than one existing lien on the property at the time of application, as PIP loans will take no lower than a second lien position. If the PIP loan will not require a mortgage, properties that hold multiple liens at the time of application may qualify if the borrower meets all qualifying criteria. Eligible property types. Existing single-family homes are eligible with loans up to $25,000 and must be the borrower's primary residence. The house cannot be a new construction and must have been occupied by someone for at least 90 days. Section 5 of the PIP Operating Manual outlines more details on this topic. Manufactured homes are eligible and will be discussed on a later slide. Condominiums are also eligible for interior improvements only, with loans up to $25,000. Process flow for a PIP loan from application to project completion. The paperwork for pre-qualification from the lender is submitted. The lender packages the loan. The lender underwrites and approves the loan, then sends the loan package to MSHDA. MSHDA reviews the loan package, either emails a commitment or a notice of missing items to the lender within 48 hours of loan receipt. The lender closes the loan and escrows the improvement amount. The lender sends the signed closing documents to MSHDA for purchase. MSHDA sends funds to the lender and boards the loan with the subservicer and HUD. The lender disperses funds to the contractor and inspector. The lender sends confirmation of disbursements made and the inspection report, if required, to MSHDA, and MSHDA sends the disbursement fee to the lender. Application checklist. The application checklist outlines the required documentation. You may want to pause this webinar and print this slide to follow along as we review each of the required items on the checklist. The first section applies to all loan applicants. The following two sections are only if applicable. The lender may want to add their logo to the top of this checklist and give to potential borrowers, highlighting the required items for them. The lender will review all documents received and will add the three items at the bottom of the checklist, the VOE, Waivers, and credit report, and submit all items to MSHDA with this application checklist on the top of the loan package. Application form. The first item on the checklist is the application. Shown here is the first page of the 5-page application to be filled out by the borrower. Application completion. There is a clickable version of the loan application on the PIP portal under Downloads and Forms. The borrower can complete the clickable PDF, print and sign, or print the paper copy and complete by hand and sign. Either version must be signed by both the borrower and the lender taking the application. All information must be completed in full on the application and transferred to the PIP portal. The PIP portal will not submit the loan online if any items are left blank. The loan packet must include all original signatures. Certification form. The next item is a certification form, which the borrower signs at application to certify that they understand they are responsible for picking the contractor, working with the contractor, and authorizing the disbursements. Neither the lender nor MSHDA are responsible for the contractor progress or lack of progress. The certification form outlines the escrow account and the disbursement process. Verification of income. The income of all the adults in the household must be verified. If the borrower or any other adults are employed with the same employer for at least 2 years, a pay stub less than 30 days old, showing at least 30 days year to date, and a verification of employment or VOE is required. If a VOE from the employer is not possible, an alternative form of confirmation is acceptable. A verbal VOE may be completed over the phone by the lender plus 2 years of W-2s. If the borrower is employed less than 2 years or has variable weekly wages, submit a pay stub, VOE, 2 years of W-2s plus the last 2 years federal tax return. If self-employed, submit the last 2 years of federal tax returns and all applicable schedules. If the income is Social Security or a pension, Section 11 of the PIP Operating Manual outlines the requirements. Section 4.12 outlines the requirements for child support and alimony. Section 4.08 of the PIP Operating Manual outlines any inclusions or exclusions to income. Computing income. The maximum household income is updated on MSHDA's public website listed here. Computing income is outlined in Section 4 of the PIP Operating Manual. There are 2 levels of income calculation: eligibility income and qualifying income. Eligibility income counts all household income and projects forward 12 months to make sure that the total is less than the maximum limit on MSHDA's public website. All adults in the household must declare their income. Full-time student income is exempt. Qualifying income determines the amount the borrower can afford to borrow. The maximum debt to income for borrowers is 45% and may go up to 47% with comps. Determining property value. A property tax statement from the local unit of government is required. This must show the current SEV, or the borrower can choose to have an appraisal performed on the property that is dated no more than 6 months prior to the application. An appraisal is not required for all applications, only if submitted in lieu of SEV. The formula for calculating the CLTV is outlined in Section 5.05 of the PIP Operating Manual or in the PIP portal under Downloads and Forms. Proof of identification is required: a driver's license or state of Michigan ID card. A Social Security number must be verified by either a copy of the card, W-2 with a printed number, or a tax transcript with a printed number. The lender is required to run a Kavers check with HUD at the website listed here and submit a copy of the printout verifying that no federal delinquent debt is held by the borrower. Student loans are considered federal debt, however, they are acceptable and calculated at 1% of the total debt if deferred. Credit requirements. The credit score minimum for all borrowers on NAP is 620. If there are no scores due to lack of credit, the borrower will be evaluated on a case-by-case basis, following Section 10.08 to 10.11 of the PIP Operating Manual. Prior bankruptcy is acceptable if 2 years have passed since the discharge. MSHDA requires all non-medical collection and judgments to be paid in full, including any arrears owed in child support. Credit history. Medical collections less than $2,000 total are acceptable. Medical collections over $2,000 total must show a payment plan. A satisfactory letter of explanation for all derogatory credit shown on credit report other than medical must be included in the application. No more than 2 30-day late loan payments in 24 months previous. On revolving accounts, no 90-day late payments or 3 or more payments paid more than 60 days after due date in 24 months previous are allowed. More details are outlined in Section 10 of the PIP Operating Manual. The next item on the checklist is the contractor's bid. The borrower selects the contractor and only submits the selected bid in the loan package. The contractor must be a licensed builder or maintenance and alterations contractor. The homeowner cannot complete the work themselves. The contractor will be paid in disbursements. The homeowner must sign off on checks dispersed to the contractor. More details are outlined in Section 10.15 of the PIP Operating Manual. Contractor lien waivers. All contractors must sign lien waivers prior to work and requesting their first disbursement. The borrower is encouraged to sign a separate agreement with the contractor. The form shown is printed with the closing docs and is here to illustrate that the lender, MSHDA, and HUD are held harmless for any payments owed by the contractor. First mortgage statement. If the borrower has a first mortgage, a copy of a recent mortgage statement must be included. The statement must show the principal balance and if there is an escrow account set up for taxes. Homeowners insurance is not required. Tiller rules require that if the PIP loan is over $7,500 and there is no first mortgage and the borrower does not reside in an exempt county as shown on the following slide, there will be an escrow account established for annual taxes and insurance payment by the subservicer after closing. Exempt counties. All of the counties outlined in black, which include the Upper Peninsula and the upper half of the Lower Peninsula, are not subject to the TILA escrow requirement. The counties in Central and the lower half of the Lower Peninsula are subject to the TILA escrow requirement for all PIP loans over $7,500 without a first mortgage. So again, if the loan total is over $7,500 and there is no first mortgage and the borrower does not reside in an exempt county, there will be an escrow account established for taxes and insurance by the PIP subservicer after closing. Property taxes. The next item on the checklist is proof of paid property taxes for both summer and winter in the previous year, if there is not a first mortgage statement showing an escrow account established by a mortgage company. Proof of fee simple title is required. The borrower may submit a recorded warranty deed or a recorded covenant or quitclaim deed with a title search to the last recorded warranty deed showing an unbroken chain of title. Or the borrower may purchase title insurance on the property. Land contracts are not eligible. More details are offered in Section 5 of the PIP Operating Manual. Manufactured housing. Manufactured homes are eligible. The first is homes that are on real estate. Loans can be made up to $25,090. The manufactured home must be post 6/14/1976, taxed as real estate, and permanently affixed to land. A certificate of manufactured housing is required. The second is chattel property, located in a mobile home park. They are eligible for loans up to $7,500. A certificate of manufactured housing is required, and lot rent is added to monthly debts. Commitments. Loan approval will be sent by encrypted email to the lender inputting the loan application into the PIP portal. The commitment is valid for 90 days. Remember, do not close without a loan commitment in hand. Loans up to $7,500 are not required to have a lien placed and will have less closing documentation required. Loans over $7,500 require a mortgage, assignment, inspection, standard flood determination, goodbye letter, and will require additional fees from the borrower. Commitment form. Be sure to proof the commitment to verify the information is correct. The required forms listed are printed out in the PIP portal and will be reviewed in more detail in the closing purchasing webinar. Compensation. The lender will receive compensation based on the amount of the loan. For loans $7,500 and under, the lender will receive $550 for each closed loan. For loans over $7,500, which require a mortgage, the lender will receive $650 for each closed loan. There is additional compensation to the escrow agent for each disbursement on the loan, up to 2 disbursements. Please note, if you would like to become a participating lender with the PIP program, email this address for a copy of the current participation agreement, grambaua@michigan.gov. All lenders must have PIP portal access, including a username and password. The PIP portal access will be set up by MSHDA after the participation agreement is approved. The portal is where you input the application, access the forms, and any informational materials. Please note, participating lenders are posted on MSHDA's website at www.michigan.gov/home improvement. Lenders should review all training materials available. That includes this training webinar, the PIP operating manual, the program guidelines, and MSHDA's public website listed here. There is also a closing purchasing webinar available that reviews the closing documents and the contractor disbursements and inspection forms. Before you start, the property must meet MSHDA compliance as outlined in Section 5 of the PIP Operating Manual. The borrower's name must be on the warranty deed with at least 50% ownership. The property must have a CLTV of 105% or less. The total household income of all adults in the home does not exceed PIP's current household income limit of $105,700 as outlined on MSHDA's public website listed here. All borrowers on the app must have a minimum credit score of 620. All borrowers on the app must have a debt to income that does not exceed 45% for total debt and 35% for household debt, as outlined in Section 10.02 of the PIP Operating Manual. The improvement must be eligible, as outlined in Section 8 of the PIP Operating Manual. Improvements must be permanent, such as structural additions, alterations, and renovations or repair, such as weatherization, roofs, windows, furnace, or septic system replacements. Again, please note, MSHDA is the investor on this loan. The lender's underwriter must perform a pre-qualification on the customer, gather the loan documents, submit the documents to MSHDA for approval, then the lender will hold the closing and disperses funds. MSHDA will purchase the loan within 10 days. MSHDA will service the loan through a subcontractual servicer. PIP loans are insured by HUD's Title I program, and all lenders must be Title I approved HUD lenders. More details are offered at the website listed. All lenders must have MSHDA's online PIP portal access with a username and a password. The PIP portal is where the application is entered, forms are accessed, and information material is updated. Thank you for your time and participation in this webinar brought to you by the Michigan State Housing Development Authority. If you have any further questions regarding PIP, you may contact the email listed on the screen.